This is Jay Martin.
The title of this feature is Deglobalization and the New World Order, and to summarize that, what we're asking is what major changes are we expecting? You know, one change I want to lead in with here, and actually, Robert, I want to throw this question to you. We've had a lot of conversations on this stage over the last 2 days about the shift in investor psychology from near-term thinking to long-term thinking. And I feel like this is almost an obligation that I have with this platform to promote this as a mindset, because we see a lot of investors thinking they're investing, but all they're doing is trading share prices. They're not even looking at the asset. So you've been in this game a long time. You've seen good markets, bad markets, sideways markets. What counsel would you have to somebody new to the game, old to the game, when it comes to managing their psychology for the long term?
Well, first of all, gold and silver are God's money. It was placed here by God. I'm not pumping religion. I'm just saying it's got atomic number this and atomic number that. I have never sold anything. I bought my first gold piece. I was looking for it in Vietnam, and I finally got to Hong Kong. I brought my South African Kruger in for $50. I still have that Kruger in today. It's worth about $2,200. And I'll never sell it. That's my game. Because it was here when the earth was formed, and I'm going to keep it with me forever. And so my theory is, rather than fight the Fed, just be the Fed. So I'm very long term. I will never sell it. There's better ways, there's other things you can do.
I love that, thank you. Okay. Now, Brent, so I want to go to you. We've had a lot of conversations at this conference about de-dollarization, right? We've talked about new oil for gold deals, the petro yuan, all of this, you know, and there's a lot of sensational forecasts when it comes to the crash of the dollar. I often look to you as like my voice of reason, right, in this conversation. So when you hear that the US dollar is losing market share, we've been watching this story for a long time, but now it's actually happening. Now there's trigger points and catalysts that are going to accelerate this process. How do you respond to that?
I think the attempts are increasing. I don't think any successes have really happened. And you know, the number of headlines are increasing. You know, with the subsequent fallout from U.S. Taking Russia's reserves and people now looking for alternatives, I think that will continue. But when you actually look at the numbers, there hasn't been a lot of success. You know, there hasn't been a lot of oil sold in yuan. There hasn't been a lot of, these transactions away from the dollar. It is happening, but it's very small. And what I would caution people to think about is there's a difference between an attempt and a success, right? And do you want to bet everything on an attempt? Probably not. You know, if you're going to take the long-term view, don't look at the short-term headlines. I mean, you can literally go back and find a headline every year for the last 15 years or 20 years where OPEC says they're going to sell, or Saudi Arabia says they're open to selling oil in another currency. The headlines are not new. And if I was Saudi Arabia, I would say, of course, I'm open to selling it, but have they actually done it? And I think to a certain extent, in the conversations I have with investors, I find that there's almost a moral part of this story. They believe that the U.S. deserves to have a fall from grace, and therefore it has to happen. And I think it will probably eventually happen. But just because we want it to happen and we think it should happen, doesn't necessarily mean it's going to happen, or at least not as quickly as we might like to see it. And so I think if you're investing and you're placing money on the line, make sure you got to look at it kind of like a mercenary and just be totally unemotional and what do I want to happen versus what's actually probably going to happen.
Now, Mark, you're an investor in the real estate sector, gold, silver, Bitcoin, lots of experience. When you watch these tectonic shifts occurring right now, and I'm talking about, I'm in my 30s, I've lived my whole life in the era of globalized economies, right? Everybody's sharing almost everything as long as you could pay for it. And I believe that trust is being shattered. We're probably not getting back to that world, probably not in my lifetime. how do you adjust your portfolio? What are you doing right now with your capital, with your portfolio for the future?
So it depends on what time frame, and it depends on what your viewpoint is. So I think to the point that Brent was making is it's not happening imminently, but it is changing. And so we can see the dollar is trending down. The de-dollarization is there. It's making less and less and less of FX reserves. It's a global trade. And so it's a trend, but it's not imminent. It's a process. But I kind of manage my money both short and long term. So for the last year, I felt pretty comfortable having a much larger allocation to cash than I normally would. I've had a lot of conversations out here over the last 2 days. A lot of people are afraid of bail-ins and things like that. And we have a gift. I mean, the Treasury's paying 4% right now on cash, and that's been pretty good. Over the long run, what am I doing with my investments, and how do I think about this? I think about most of my investments that you guys think of investments, I think about as savings. And so gold, I love gold. That's a good way to save. Bitcoin is a trend, as Jay said. I'm a big Bitcoin proponent, and I think that's a big, long trend. I think there's a lot of good action in front of us in the next 12 to 24 months. But I think over the long term, as Robert said, he's going to keep his gold till he dies. I'm trying to set up structure so my grandkids will own my Bitcoin. So I think about it long term. So I'm really interested in gold right now, and I'm really interested in Bitcoin, both because I believe, as Jay kind of framed this up, as deglobalization. As the world continues to break apart, which I believe is happening, as there's less trust, I see we'll see multipolar worlds in small sections of world, and that means more inflation. So I have a lot more inflation, and so I want hedges to that inflation, and also I think there's a lot of currency risk. So gold and Bitcoin are two things I'm super bullish on.
Love that. Thank you, Mark. Now, Ninja, over to you. So can I call you Ninja? Can I do that?
I would appreciate that.
All right. Similar question. You know, we've spoken about a couple of the major headlines we're seeing in terms of de-dollarization, no matter what side of that bet you land on, deglobalization, no matter what side of the bet you land on. Maybe touch on where you're positioned, first of all, from an opinion standpoint, and then how you have positioned your portfolio accordingly, just to give the audience some context.
Yeah, so where my positioning is I have cash for deflationary spikes or fear events, for good smoking deals that come in and out of market cycles. I have Bitcoin, cryptocurrencies like Mark has for those different cycles. And then I have gold, right? The inflation hedge, the king inflation hedge in my opinion. Where I think that we need to be focusing on is watching what just simply happened when Ukraine and Russia started their war, and what happened with supply chain breakdowns and narratives that added to cost increases. We're seeing the world split, fracture into two economies, essentially the East and the West. And if we see any more of those issues, we're gonna see more inflation because of trade deals changing, things like that. So that's what I'm starting to think about.
Now, I opened up this conference with a bit of a doomy forecast, and I'm the furthest thing from a doom and gloom pundit. I've said that before. I'm a perpetual optimist, and I'm long human ingenuity and progress. But there's a lot of chaos occurring right now because we're definitely in a couple major transition points. And when big systems change, there's inherently a lot of volatility. So whether we're looking at a shift in how commodity transactions occur, a shift in geopolitical relationships, there's going to be some major bumps in the road. And this decade, I believe, will continue to be how the decade's been thus far. Thus far, we've had a global pandemic in 2020, civil unrest on a scale I never thought I'd saw in my lifetime in 2021, and a hot war in 2022. We created a theme for this conference called Build Your Moat Before You Build the Castle, because I can only see bumps getting bigger for the next 7 years. I don't think this decade's done with us yet. I think the party's probably just getting started. Do you think I'm overdoing this, Brent? Or do you think I'm over-dramatizing this? Or what are your thoughts on general volatility for the remainder of this decade?
Well, I actually think it could take up to 10 years for this whole transition to play out. I don't think this is something that's going to happen over the next 6 months or 12 months, and then we're going to be on the other side and it's all going to be rosy. I would expect this plays out take at least 2 or 3 years, and maybe up to another 8 to 10 years. So I don't think you're under dramatizing it. I actually think you're kind of right on target. I mean, I've said this before, and I really mean it. To me, this is not chess versus checkers. To me, this is the Game of Thrones. This is the big game, and I think all the countries, the U.S. is trying to stay on top, and I think there's other countries that are trying to ascend to the top of the mountain. and they want to take our spot. And I don't think that the U.S. will surrender it, and I don't think that they will stop trying to take it. And so that sounds a little doom and gloomy, but I think it's reality.
So what major shifts, if you were to speculate, right, thinking forward over the next 3-4 years, are there any major shifts, Brent, that are catching your eye as more probable than others?
Well, Mark and I have talked about this a little bit about the trend towards decentralization. And I think that's correct to a certain extent. I think that's correct on a global basis. We will decentralize rather than globalization, we'll have deglobalization. So it'll decentralize from one economy. But on an individual country by country level, I think it's going to become more centralized. I think governments are going to centralize power. I think each country is going to become more strict, nationalistic, perhaps put quotas on imports and, keep people from exporting certain goods. But then on an individual level, because I think we will get into, some hard times, I think people will have to become more self-reliant. Rather than depending on their company or their country, they're going to have to depend on themselves. So at an individual level, I believe in decentralization. At the national level, I think it's going to get very centralized very quickly. But on the global level, I think it gets decentralized. And so that probably just leads to volatility. And I don't know whether it leads to inflation or deflation. I try not to get too caught up in which one it's going to cause and just understand what could cause each of them.
Okay, now, Mark, I want to go to you next then. Can you describe what a transition to a more decentralized world looks like? We're speaking to retail investors, general consumers. How does life change? What are the major shifts you would anticipate? And what is a decentralized world?
Yeah, so Brent summed it up really well, and we've been spending a lot of time together talking about this, so we kind of see eye to eye on that. And so I think globally we're seeing that, right? So we're seeing from a unipolar to a multipolar world. I think we probably break into 4 or 5 regions where we kind of have like nationalistic, but maybe like it's North America, maybe South America, Australia, the UK together, for example, maybe Asia, maybe South China, Asia kind of gets together. But we have these different regions. But I also think, as Brent said, personally, I think I've been saying we're going into the age of personal responsibility. And something I've been talking about is sort of like this blow off top of socialism in a sense where we've given everything to the government. So markets run out of steam when they run out of buyers and they get very volatile at top and they blow off. And so we've handed the government our children's education and our retirement and our health care and our entertainment. We handed them everything and there's nothing else to hand them. And we found out that doesn't really work well. When you give FTX all your money and you give them your responsibility, then they disappear with your money. And so I think that era is coming back of personal responsibility. I think we're seeing that. And so unfortunately, I think things get a little worse before they get better. So I don't think you're being too hyperbolic with that because we get a lot of volatility at the top. So volatility from markets-wise, I think we'll see inflation volatility go up and down. I'm saying that we have not peaked for the decade. I think it continues going higher because of this. But also social volatility. And I think we're going to continue to see this struggle. We see the big talking point at the WEF this last week was misinformation. How do we stop that? Yesterday, Europe announced potential sanctions against Twitter about if they can't stop misinformation, they can't have Twitter there. And these types of things will cause more social volatility. And so I think we're going to continue to see people get more divided. And so those are things I would expect socially as far as inflation, prices. Now the good thing is that storms bring waves, and I'm a surfer, so I like waves. And volatility brings opportunity for investors as well. If everything just stayed flat, there's no waves to ride, and if everything stayed flat, there's no money to make. And so while inflation may be scary, I think it also presents an enormous opportunity. They're two sides of the same coin. So while there's certainly time to be cautious and pay attention, there's also massive opportunity. So I try to stay optimistic on that side.
Yeah, I love that. And I love how you touched on the emergence of personal sovereignty, right? And I speak about this a lot. And if things have to get worse for people to take control of their lives and take responsibility for their future, I think it's the best case scenario, right? Life's been pretty good for a pretty long time. And it's a very valuable realization to understand that nobody has your back, right? And that's a good thing because it puts you in the driver's seat, right? You want to be at the steering wheel, not somebody else. Ninja, any thoughts on what was just shared? What do you agree with? Anything you disagree with?
So I do completely think you're on board with the doom and gloom. I think you're legit, but I'm going to take a little bit of an opposite take than Brett did because you were talking about 8 to 10 years. During the Great Recession, The crash actually started in 2005. We started seeing mortgage-backed securities have issues, sales started to drop. Then after massive layoffs, we started seeing people not being able to make their payments and things like that. It took a certain amount of years until everyone had this realization that, oh, we're in trouble, and that was obviously Bear Stearns and Lehman Brothers. Then a couple years after that was the cleanup. Information is moving so much faster today with apps like YouTube, Twitter, and things like that, that realization of what's going on or where we are in a cycle or what we should be doing every day to get ready for the next downturn, because it's not a matter of when, it's a matter, or an if, but it's a matter of when, right? So I think that that is gonna move a lot faster. And like you said, so much has changed the last couple of years where you could have never predicted this. And we are on uncharted territory. So what do? It doesn't take much to get prepared. Robert said once, you were talking about tuna, and it's a great hedge. You wanna make some money, you wanna outlast right now the S&P index, buy a can of tuna and watch what happens, or a carton of eggs, right? But once you buy that and you set it off to the side, you're done. Once you set aside an emergency fund of cash, you're done. Once you go and invest in gold and you get to your goal, you're done. Then you have a clear mind. You don't have to worry about something if something instantly happens. And you can start to invest and you can start to really push forward and take advantage of these downturns. So I don't think you're off. I just think that the time is going to be sped up.
Okay, now Robert, over to you. How can my crowd best hedge themselves and set themselves up to weather any incoming volatility? Now, you're unique in that your background is in gold, and a lot of individuals would identify you as a gold bug, but you hold Bitcoin too. And so you've been able, which I really appreciate, because I've seen way too many Bitcoin versus gold debates in the last 6 years, and I don't get it, right? These are different things that have different utility. I understand the philosophies are remarkably similar, but we're comparing agriculture to Facebook stock. Like they're not apples to apples, right? One's a 3,000-year-old asset, the other's a 15-year-old technology. You saw right through that right away, and you invested in both. So why? What did you see, and how did you get there?
Well, let me give you the macro picture of this, is because in 2008, when the market crashed, I thought I died and went to heaven, because as a real estate guy, the real estate market crashed. So I borrowed $300 million. So as you guys know, the US dollar became debt in 1971. All fiat currencies became debt, so I used debt as cash. So I bought all this real estate all across the Southwest, so I have about 12,000 rental units. And because I use debt financing and I have real estate, I pay no tax. America's a tax-free nation. And with the cash flow from my properties, I buy gold and silver and Bitcoin. I don't trust fiat currencies, but this is how I built my moat, because I don't trust any fiat currencies. So what I started to do was storing gold, silver, and Bitcoin around the world. So that's my moat. And I own a Lear 60. So what I do is I have my gold and silver stored in Denver. If I need to run to Puerto Rico, I just taxi my jet up into Denver. You know, it doesn't take much gold to make a lot of money. I put that little container over there, and I fly to Puerto Rico anywhere, because gold and silver are money all over the world. I don't give a shit. And then I own gold. I have gold and silver stashed in Singapore. So if anything's happening in Asia, my jet taxi's up there, the little door opens, gone. And then I have gold and silver stashed in Liechtenstein. And my little jet taxi's up there and all this. Because let me say this, I don't give a crap what the Fed's doing. I don't care what the Bank of Japan, Bank of England, I don't care. I built my moat just like you advise people to do. Gold and silver are God's money. Bitcoin is people's money. It's money all over the world. So just get your jet and stash it in different parts of the world. And when you need to run, just taxi the jet up,
It's really simple. Just get a jet.
or you just have a friend that has a jet. So Robert, I'm with you.
But you guys are in the right place to hear this stuff. All you have to do is understand that the US dollar, it's fake. So I use debt, and I invest in gold and silver. I don't trust the Fed, I don't trust the Treasury, I don't trust Wall Street. I trust me, gold, silver, and my jet. Got it?
Jay, one thing I'll add to that. So let's all aspire to a jet. Now,
I'm with you guys are taking notes right
I
now.
have a paper airplane.
But the one thing I just echo on to what Robert said is that he said he doesn't trust the Fed, right? So he trusts gold. And if you look back, I mean, the history of the U.S. government is they seized the gold, 1933. And if you had all your money in the bank and they seized your gold, and then they revalued it from $20 to $35, so they devalued it instantly, and that puts you in a bad situation. But if you didn't have all your gold in the bank, if you had a ranch and 150 head of cattle or something like that, you weren't affected by that. And so the Fed is going to do what they're going to do, and there's a lot of control coming. There's going to be a lot of manipulation. There's a lot more magic tricks up their sleeve than we know what they are going to do. Like, they're going to keep this charade going for a longer time. It's going to be bad for us over a long period of time. But you can limit your exposure to that, just like you would have in 1933. You didn't have all your money in the bank. And as Robert said, he has ways that he protects himself from what the Fed is doing. And so I think that's the position I would take. And I think the other thing I would say is that, in the United States, we're already arguing over the debt ceiling again. Is that going to be solved? Is the debt going to continue to go up? Are they magically going to fix that? And of course, the answer is no. And so directionally, which way is it going? So consider that the Fed is going to continue to manipulate. It's going to be a little bit of an adversarial position, potentially try to continue to squeeze and extract more money. Now there's 8 states in the United States talking about creating a wealth tax, taxing unrealized profits. That's only going to continue. But you can shield yourself by having a jet and gold in Liechtenstein.
I got to say something, because how do you follow the jet? The facts are Robert has taken advantage of cycles throughout his career, and he's built himself into a position where he can do exactly like you said, but how many of us can, right? I aspire to do that. Well, one thing, like you said, he doesn't care about the Fed, right? Because he protected himself a long time ago. I get excited when the Fed starts raising rates. Why? Because I know what's coming. People get greedy, then they figure out they bought more than they could afford. And that cycle starts to turn down and it repeats. Wash, rinse, repeat. So when you see these things happening, and yes, the Fed's going to keep this charade going for a while, but it's that pause after it's not just we're going to raise and all of a sudden we're going to turn down. There's always a pause. And the pressure that's increasing from that pause, the layoffs that come, the opportunities in the downturn of the equity, the real estate values, those are the opportunities. But you have to be prepared like literally a financial firefighter. As people are running out saying, you're nuts, we're leaving, we're claiming bankruptcy, we're not paying on our car payments, things like that, you're running in to buy up those assets. That's what you have to be mentally prepared for. So then hopefully you get into the position where you're cruising that jet and not a paper airplane like me.
I love that. Now back to you, Brent. Do you see a rotation in the way investors are allocating their capital, right? We've been in this speculative asset bubble where investors really just look at charts and prices and not the assets. And we might be seeing a bit of a shift. A lot of the conversations that we've had on this stage for the last 2 days predict a bit of a shift, investors getting back to a more sane approach to capital allocation, and maybe even disregarding the share price and just looking at the asset. It struck me when Mark said, if you owned cattle in a ranch, you weren't impacted, right, by exactly, right? So, are you seeing a shift in your network right now with a focus on the underlying asset and the business?
So the short answer is no. And I'll tell you why. I think they should. And I think, the person that would typically come to a conference like this is thinking that way. But this crowd is a very small representation of the overall market. And in fact, what you're seeing is retail investors as a whole are doing more short-term trades than long-term trades than ever. The amount of volume that takes place on same-day options, so options that don't expire in a month or a year, but that expire today, is through the roof. And they're being used more and more as a result, or as a percentage of the overall trading. So I would argue, and again, The general market, again, maybe not this crowd, is on the risk on, risk off. Nobody's thinking about 3 years down the road or 5 years down the road. They're maybe thinking about Friday, right? Because we've got a Fed meeting and then we've got new farm payrolls, but not too many people are thinking of next Tuesday, right? Yeah. And so I think that's important to remember. It's like it's important for you to think long term and think about these big things, but don't confuse what you think about with what the general market thinks about, because I don't think that they think that way.
And if they're not thinking that way, is that an opportunity to be thinking that way?
Sure, absolutely. There is an opportunity there. But one thing I would say is, again, I'm a huge believer of gold, and everything that Robert has said is correct. And one day when I have a jet, we can have a race to see who gets their gold first. But to take advantage of the cycles, you also need to have cash. Because when the big crashes come, every time the big crash has come for the last 25 years, gold has gone down with it during the crash. Now, gold has always recovered faster than everything else. So it doesn't mean you should sell your gold in the downturn, but you either need to be prepared to borrow cash or have cash to take advantage of the downturns. So, it's fine to hate fiat currency, but it can be useful at times.
All right. Now, down the line for the group, your time horizon is 5 years. You have $100,000. Your only goal is to retain the purchasing power. We don't know what the future holds. We're expecting chaos. $100,000, 5 years, retain the purchasing power. Where do you put that wealth? Start with you, actually, Robert.
Gold and silver and Bitcoin are international money. I hire the best attorneys and accountants. Everything I do is legal. So every time I hear you guys talking about 1933 and confiscating of money, if you can't outthink the Fed and the Treasury, just hire a smarter attorney. They'll get you out of this country legally. Do everything legally. So good accountants and great attorneys are worth the price.
All right, I love it. Ninja.
I'm going to say gold because especially not only purchasing power against inflation, but also because of a fracturing of governments and their need and desire to start grabbing as much resources as possible. And a lot of those resources that they need have to be tied to their monetary policy, so that's going to be gold.
Thank you. Mark.
Is it one asset that we have to buy 5 years and leave, or what is the strategy?
Well, give me your strategy.
Okay.
No, I'll put it with you.
If I was going to buy one asset and I had to leave it for 5 years and come back, it would be Bitcoin. I think Bitcoin has never been down over a 3-year period. So, it's a short history, but I think that shows over a 5-year period, I believe it's going to be much higher, probably be the best storehold of wealth. However, I wouldn't put 100% of my money in that. So if it was a strategy, it would be a combination of majority Bitcoin, higher allocation, a little bit of gold, and businesses. Businesses are inflation resistant because you can raise your prices. So combination of those three.
Love that. Thanks, Mark. Brent.
Yeah, if I had to just choose one asset, I choose gold because you will survive with gold. But the good thing is that in the real world, you don't have to put all your money in one thing. So don't do it. You don't have to do it. Don't do it. I'd put 25% in U.S. dollars, 25% in gold, 25% in the Dow, and 25% in real estate. And if you have that portfolio, you will survive. You might not be flying in a jet, but you are going to survive. And I kind of feel like in times of volatility, priority number one is to survive in advance. And then if you see an opportunity along the way to really make some money and take a shot at something, that's fine. But don't go all in on something just because you heard somebody at a conference say to go all in on something. Just don't do it.
And to echo something that we talked about at lunch, it's are you trying to get rich or stay rich? So everybody here is in a different room. If you're trying to stay rich, it's a different strategy than if you're trying to get rich. And even if you are trying to get rich, you want to make a couple swings for the fences. Do that with a small position of your portfolio so you can have fun and play and hit those swings and have something to brag about. But do that with a small percentage. The rest, stay rich. And as the question says, how do we keep that wealth?
I love that. All right. Thank you all. Ladies and gentlemen, how do we do?
This is Jay Martin.